I remember having this conversation at Freeze. It was like the traditional art fair. Deutsche Bank is the sponsor of it most of the time. And the people that show up to that on their side are like wealth managers for people who have art collections. Talking to them, I was like, oh, do you know what a CryptoPunk is? They're like, what? No. Yeah. And you pull up this little website and it's like, oh, that's like that little face is $100,000, like it's $100,000 artwork. And this collection is $1 billion artwork as a function of that, that's right? Wild, like the cheapest one is $100,000. There's 10,000 of them. Not only is it that valuable, you can accept a bid in 5 seconds. If you had a like $10 million art collection you wanted to liquidate that's like in frames in a free port off the beach somewhere, you gotta get it like validated, like get the provenance looked at, get somebody to age the paint, go and like find a buyer for all the different pieces, go take it to auction, pay Christie's fucking 30% on every time they sell something. Like it's the same exact market, but it's way more efficient.
Welcome to another episode of Not Investment Advice. You got Jack Butcher, Bilal Zaidi. Jack, good to have you back, mate. Well, good to have us back. We haven't recorded for a few weeks. Everyone knows we did the back-to-back banger AMAs. Hope everyone enjoyed those. Some really amazing questions. We've literally got some left that we didn't get to, so we'll see if we get time later today or maybe next week. We'll see. But this is going to be full-on edge of the internet vibes today, taking it back here. Jack, what a wild few weeks it's been since we saw each other. That's another nice, since we recorded last. That feels like ages ago now, isn't it?
That feels months ago.
Some nice Greek food.
2 or 3 weeks ago, yeah.
Out and about. That was
great
a good time.
Day, mate. Little couple bevs in the sun.
There you go.
Very nice.
Little sunshine vibe. Dime Square, not to dox us, but we're no longer there, so it's all good.
That was a good time.
Anyway, we got ETH Narrative Changing. Mate, this is a bit of a mad one. Obviously, Bitcoin also hit all-time highs since last time we spoke. It went to 123K in dollars. What is it today? Let me see. We're at 119, so not too far off there. And ETH has gone all the way up. It's 3,700 today, 3,750. I will say it hasn't hit the all-time high though, right?
Yeah, it was 47
all-time
or something.
High was 47. Yeah. So it has gone up significantly in the last 3 months. But in this cycle, if you think from the time we've been doing this pod, this is, I guess, the second-ish cycle, if you believe in cycles. Last time it went to like 4.7, you said. Bitcoin went to 69,000. Now Bitcoin went up all the way to 120. This hasn't happened yet. There's been a bit of a narrative change. But what's it like in your world? Because obviously you're a lot closer to this than I am. And there's a lot of crazy stuff people are doing. Treasury companies, we'll talk about that after. But yeah, what's your perspective on it, mate?
I mean, the Bitcoin, Ethereum, maybe it's too early for the victory lap, but the Ethereum holders' experience over the last 2 years has been diabolical from a price perspective, right? Like lost a lot of momentum to stuff like Solana, where you have these like cheaper chains that are able to do like a good amount of the like replicate the functionality in some way, but maybe not on the same type of infrastructure, and just lost a ton of mind share to obviously maybe the formality that's happened around Bitcoin in the last couple years with Saylor, and like even the governmental recognition of Bitcoin as a commodity and all that kind of stuff is like there was way more institutional capital plowed into Bitcoin in the last 2 years than Ethereum.
Yeah.
And Ethereum was like at this weird crossroads, like I mentioned, with the like ability to write smart contracts and run these decentralized programs is something that you can replicate on these other chains, which is true to some degree, but they haven't been designed. Well, this is like me retroactively analyzing this, I guess. It's like the reason there is more institutional interest in Ethereum now versus some of these newer chains is because it has, zero downtime since inception. It's way more of a decentralized technology, and it has, I think the big one institutionally is that it has this like native yield component, right? And that's obviously not something that occurs with when you hold Bitcoin. The expectation is that scarcity will make the the network appreciate over time, and Ethereum took a different approach to that, proof of stake, and these rewards that you get for securing the network as a participant, not necessarily as you don't have to be a miner, right? You don't have to run like $10 million worth of hardware to get yield from securing the network.
Yeah.
So,
and there was even like liquid staking, like, because I think what is the minimum you needed to have? Was it 48?
32.
I forgot.
32 was
right?
to run the node.
Your own node, but you could do liquid staking using like
all these centralized platforms let you do it now, and like Coinbase will take a few little bips.
Get that yield in there. You know what I mean? We've been there last time, man. Don't do it unless you're really ready for the risk there. But
10 million % APY. No, but I'm talking about at the like L1 ETH, the 3-4% yield that's been like, relative to network activity, like people have been capturing that for years since Ethereum has been running.
Yeah.
And then a lot of this renewed activity, like really, I think comes from the stablecoin narrative. Right, I think there's like way above my pay grade understanding of even like the stability of the dollar relative to all of the treasury bonds that will get issued because people are creating these digital versions of dollars, right? Banks are making them.
There was like the Genius Act that passed, sorry, did it get passed, or what's the actual?
I'm pretty sure it passed.
Here?
Yeah, I'm pretty sure it passed.
Whatever, it was a celebration there last week, and that there was Genius Act. There was a second thing which I forgot the name of, but
stable something. I think exactly, stable. I think it was another Trump. Remember the stable genius meme? I think it's literally insane.
Anyway, but just the short there is basically the regulation is now there for people to be actually have proper stable coins, because before people were using stable coins, we've talked about it on the pod a lot, but there wasn't a real regulatory environment for it properly to define what is right and wrong. And the big one, I think, is that you have to essentially have real US dollars, fiat in reserves.
Which the theory is that that's going to massively increase demand for like government issued debt.
Yeah.
So why would you force this through? Like, that's one good reason.
Yeah, and it's like for the US government, even that's the argument, I guess, is that it extends the value of US dollar internationally. If other people are using stable coins across the world, that means those people issuing it, whether it's Circle for USDC, Tether, etc., they need to then have that amount of dollar sitting somewhere, essentially. And I also do think, just generally trust-wise, that's obviously a really big thing, because that means they can actually get audited and all that sort of legal stuff, which I think is a very good thing, obviously, because you don't want bad actors messing around. Because the kind of stuff around Tether in the past has been people doubting if they actually had the amount of collateral there, or were they, let's not just pick on them. Other people could also be doing all sorts of shenanigans. Like, instead of keeping it in dollars, they could buy stocks, or they could buy Fartcoin, or they could buy something, that is going to go up and down with a lot of velocity. So, yeah, I think that's obviously a big part of the narrative. Is there? You also mentioned like the Treasury stuff, because we saw that obviously with MicroStrategy buying up Bitcoin. That's been going on for many years now. There's other companies doing that, but now we're seeing it with ETH as well, right?
Yeah. So there's like, I think the first one was this S-Bet, like was it called Starlink Gaming or something? I forget. But it's somebody who was like part of the Ethereum founding team that got involved in this company and then started buying obscene amounts of Ethereum. I think they're doing like over the counter deals with the Ethereum Foundation too. So it always used to
direct,
be this,
basically.
Yeah, it always used to be this
exchange.
Exactly, and not like the Ethereum Foundation dumping it on the market, which was always terrible optics, right?
That was the meme, yeah. And the reality, I guess, as well.
Yeah, and now, like, I guess the Sailor Playbook. Again, like we were just talking before we started recording, there's like 5 instruments now in the MicroStrategy, like arsenal, I suppose, was like 4 or 5 tickers that you can buy. That
I saw it presented as an actual pyramid today on Twitter, so that was something definitely quite
You got to
alarming.
flip it upside down. You have to
flip
turn
it upside down. Yeah, like exactly.
Yeah, so like same idea here, and Tom Lee, fund strat, great salesperson. Like people have been sort of moaning about this for years, that Ethereum never had its Michael Saylor, you know? Like you have to give massive amount of credit to Bitcoin adoption and like lore and story and just like how people explain it and who they introduce like new people to or where they send them. Like Saylor has just done an insane amount
that's the thing, it's kind of hard.
There is no second best
to compete with it. There is no second best in this case, exactly. Because we were talking about the biology one. I didn't listen to the full episode, but I was skimming through a little bit, and some of the things he was coming out with, oh my god!
I mean, it's just insane storyteller,
vibrational energy, and it's insane, man.
Well, this was I was going to give props to Tom Lee, because he kind of had it, the Cyber Hornets alternative. He's on CNBC every other day, right, this guy, right? And he's like, I think he said stablecoins are crypto's chat GPT moment. So he's coming out. He's trying to write the banger interview lines as well, where you get these like, you know, build these very easy narrative onboarding, and that just has not been the case with Ethereum for the most part. Like it's insanely complicated and incredible technology, but it's like been in that developer community for a long time. Bitcoin obviously has the, you know, we'll never make any more of it, therefore price go up. Ethereum does not function that way at all, right? It's like totally dynamic system where fees are burning the supply and the networks are scaling out from the L1. Anybody can run their own like L2 network, and people are asking whether or not value will ever accrue back to the base layer because you're like decentralizing.
Still have
all
that
of this
question,
compute.
to be honest, with even stable coins in this case, but yeah,
I think valid as well, and the I don't know, I have this like had this strange like realization with this. Even the stablecoin stuff I think will obviously cement a ton of value on there, but it also, there was some question a couple of weeks ago where it was like the amount of dollars secured by Ethereum will be worth more than the Ethereum network. You know, like
that's interesting. Yeah,
which
because of stablecoin values, right?
And the value of the stablecoins is like many multiples of the like circulating supply of ETH.
That
in
makes
terms
sense.
of its like dollar value.
Yeah, because it's basically like people just transacting, and it's like Shopify stores will have stable coins plugged in, I'm sure, and all that sort of stuff.
Exactly. And I think there's some strange dynamic there was maybe never happened in markets before, right? Where a company is worth less than the assets it quote unquote holds or secures. Maybe that is the case, though. I'm
curious,
bank.
Maybe like Visa. Is Visa something? I'm just trying to think this out. I'm just thinking out loud here, because I guess Visa has the amount of dollars it's processing is, I'm sure,
just a massive
crazy,
treasury,
huge amount. But
just
then
must be obscene.
They're also obviously worth quite a lot of money themselves. So, but yeah, that makes a lot of sense, because the value on the network is just a crazy amount in this case.
Yeah. So I think like it's the same like weird arbitrage. You know, Pomp also has a good line on he launched one, I think, since we last had a pod as well. Pomp's in the Treasury.
Oh yeah, I saw that.
Treasury game.
I was actually just chatting with him over a text basically about that, because it's a crazy thing he's done. He's basically going to raise money, right, and then acquire
200 million or something. I saw.
It's crazy, yeah. And then he's basically gone and bought this thing, doing the same playbook. Yeah, pretty incredible.
And to add another line to the the marketing playbook, his is, if you like, Bitcoin is the hurdle rate. If you can't beat it, you have to buy it.
That's
which is a good
great
one.
way to put it.
Like and that I think was the impetus for the strategy move in the first place, right? Looking at your cash pile, it's on fire metaphorically. like a business is not growing at the same rate or not even close to the appreciation of something like Bitcoin. So start buying it. And it's just taken years, I guess, for other people to mimic that strategy. And the Ethereum thing is like playing out in the same way, essentially. I think they also just made the yield. I think they just made it legal for you to pass the yield on to the end user as well. I think that was like all the ETFs when they originally filed, they didn't allow that.
Yeah, like the ETH ETF, right?
Yeah, I don't know if the banks are collecting that. Probably.
I guess if they're the ones holding the ETH in that case, so yeah, that would actually pass on. Yeah.
But that's also like another reason why there's some like narrative momentum in like, oh, your 401k should have 5% crypto and 2% ETH because like ETH has this native yield that like dividend stock, right? It's the same thesis.
Well, it makes it a productive asset, I guess, right? Is another way of putting it. Because if you think that's been one of the criticisms in the past of even Bitcoin is just it's based on narrative and story alone. I would say gold is similar. And when you buy a stock, you're buying future cash flow, dividends. There's actually some numbers to back up a business selling to customers, etc. Yeah. And in this case, you actually are getting, you're getting an actual yield based on the fact that people are transacting on the network, especially now with stablecoins. Makes sense.
Yeah, and the like the thing that was being contested recently with all this like terrible price action in the last couple of years is this like roadmap that allows you to scale out from the cost of the L1, launch these chains, and then settle all the transactions in batches and pay a very minimal fee to Ethereum, the base layer. But that's like the point of contention is the value accrual that's happening these layers out from the base layer actually going to come back to the network? And I feel like there is going to still be mythical Bitcoin-esque law to that, right? But there are also like demonstrable, like the chain makes revenue every day, this amount.
Yeah.
And yeah, still I think relatively under adopted or used, and these like I think the applications of these stablecoins are like you're seeing a lot of like massive payment processors move into that space as well.
Yeah,
obviously
I think that's a no-brainer now. I mean, we've thought that for a while that it would make sense just in terms of the idea of like what's the point of this technology in the first place? Is there any real benefits? This is the biggest benefit I can see of actually like a real use case, let's say, outside of digital gold store of value with Bitcoin. This is like faster, 24/7, the programmability of it. So if you're creating apps, you can do stuff with it and stuff like that. The kind of ideas we've talked about for many, many years on the pod, but that actually going mainstream is actually, seems to be on the precipice now. But I guess, Jack, just to bring it back a little bit. So when we had Saylor on the pod, I was really the one towards the second half of that, kind of challenging Saylor a little bit on ETH specifically, right? And if I remember correctly, I was kind of saying, you're a technologist. Do you not think that long-term ETH has a lot more upside in terms of, not necessarily upside financially, but just in terms of
application,
exactly. At that moment, let's take us back, right? DeFi, NFTs, all of this was happening on stablecoins. All the interesting stuff in the actual technology side and use cases was happening on Ethereum, right? Obviously, fast forward now, like Solana really took off. It was already kind of around back then, but it wasn't at the same level as it was this time around. Like a lot of the meme coins, NFTs, all that sort of stuff was happening on Solana as well this time, if not primarily, like the meme coin stuff for sure.
Meme
was happening more.
Volume was crazy.
Yeah, maybe not NFTs actually, because I think NFT there's a little bit more of an old school. Old school meaning like from 3 years ago or 4 years ago,
old school,
ETH community. But let's in terms of like long term thinking, well, if there's like fast transactions, cheaper transactions, apps that were being developed using Solana, like that seemed to me like the real use cases were happening on there in a way, for like consumer side anyway. Now, if you think of like institutional stuff, if I'm a government that wants to develop smart contracts for certain things, yeah, I'm probably still going to use Ethereum, right? That's probably like the way it's heading. But that was the kind of risk inherent in that. If we're going back to that conversation of like Bitcoin, what was cool about it was simple. The narrative was, it still is, right? It's digital gold. There's limited supply. We're in a world of, we've had high inflation. We've had, almost unlimited money printing in many ways, devaluation of fiat currencies. If you believe in that story, this is a hedge against that system, right? So
well, I think if you would go the Sailor route too, it's like, it is not just story, it's energy, right? It's like it has a real cost to maintain the network. And that was also the criticism of Ethereum, was like, it was a proof of work network with very similar dynamics where you
switched to
plug processing power in and it switched to proof of stake, which I think a lot of people, like if you look at the chart from proof of stake, like the ETH BTC chart from proof of stake, it's literally 45-degree angle into the floor. Like the narrative of digital gold plus like, the real world cost to like produce a block is also like there's some equilibrium happening there, and the hash power of the network is measurable and things of that nature. Like that to me is that's the more pragmatic thing when you're challenged with the idea that, this is a story that people are choosing to believe in. It's like, well, it has a hard cost to participate in mine as well. Yeah. And there's again, beyond my ability to explain simply or even understand, is like some of the criticisms of Bitcoin far into the future are about the security budget. It's like, how is the network going to pay to secure itself in 10, 15, 20 years time when the market dynamics of today are not in place anymore? And Ethereum sort of foresaw that and developed a mechanism called proof of stake to ward off that same dynamic. And it's still, still theoretical for both and will remain that way, I guess.
I guess for now though, sorry, were you thinking something there?
No. I just carry on.
No, I guess for me, just trying to be intellectually honest with myself, that was my position when we had Sailor on the pod. I was obviously still very pro and continue to be both of them generally, but that my opinion changed, like if I just look at my own bags, to be very frank, right? I did take off a lot of risk with ETH specifically because I didn't have the same, conviction in it that I did say 3-4 years ago, specifically with that dispersed energy that went into Solana and other chains. Even stuff like, honestly, like Hyperliquid, without getting into all the weeds with that, I don't even use it, but just seeing the energy around that and like people actually using that for certain things, I was like, okay, well, these use cases are going to be around, but it's been so many years of promising each time, like, this time is different, we're going to get this adoption in this area and the technological change is going to happen. My opinion on it was, I believe in the technological future of it, but I also believe that most of the price action was based on story, like most things, to be honest, right? So it's not that different to other stuff. It's just a purer form of that. So my opinion has changed on that personally, and so that's why I've been way more bullish on Bitcoin overall, just because it's simple. I think as I see conversations with, even like older people more in traditional worlds, I speak to a lot of people in like finance or just even people our age, private equity, like that world understands gold, and they're like, okay, this is digital gold, this isn't hedge, put 2% in it, put 5%, whatever you feel comfortable. And that has now slowly started to change to people being like, well, actually, where's returns going to come from in the future when everything has been on all-time highs? So anyway, that's just specifically is like my own kind of investment hat on. Obviously not investment advice, but that's just my personal take on it. And also this idea, we talk a lot about Morgan Housel's book, Psychology of Money, and one of the ideas in there is about, I don't know if he came up with this or someone else, but just all decisions aren't based on optimizing a number, right? It's about like, can you sleep better at night? And for me, that was a big thing for me, is like, do I actually just believe in the simpler narrative here? And I'd rather just focus on that as my kind of upside into this world. That's how I personally have treated it. So regardless of what happens with price action on Ethereum and Solana even, to me, this is just like the simpler thing. I can focus on my day and get on with, living my life sort of thing. Exactly. Stats, work hard, go for your walk, have a good time, go for some Greek food with Jack. There you go. So,
yeah, well, it's just utility in itself, right? That is a massive pillar of the narrative and community and the belief system that goes along with a lot of people that build infrastructure for Bitcoin too think that way.
Yeah. Well, I guess I'm curious to hear your point of view as well, because you actually make money in this world, right? Like you've sold art and primarily people pay in Ethereum, I take it, right? Like things are mostly priced in ETH most of the time for your work. So having been so much closer to it, has anything changed for you, how you see that?
Well, I think I just have, I guess I have a positive bias for that reason too. It's like, it's an economy that I've been able to participate in. And the idea that the majority of, not majority, but a good amount of the quote unquote value that is produced every day is digital, like ephemeral, like these objects that you make or put your time, effort, love into have value and people want to own them. And that somewhat exists as a dynamic on Bitcoin now, right? They have the Ordinals protocol, which is again not qualified to make the technical comparisons, but it is not as elegant as NFTs on Ethereum, in my view. Like there are things that you could argue it does better in terms of like the storage of that thing in the protocol is maybe more robust than a good amount of NFTs, not all of them. But the elegance of Ethereum and the things that you can do with smart contracts and like the medium that it opens up for you to practice on as a artist is just miles and miles apart.
How about compared to Solana? Because you did some stuff on Solana too, no?
I've done nothing on there.
Oh, you didn't? Oh, I thought you were going to test something at some point.
And I think probably comparable in terms of technically
functionality or something.
Yeah, I would imagine. I haven't not really explored it at all, but just there's also these like philosophical alignment I feel with Ethereum, the way it's developed, the people that use it,
that's a good point.
People that have practiced as artists on Ethereum prior, it's kind of like it is a real different material. I think like that there's a really bizarre experience you have with it. I always use this analogy of like when you first use the internet, you got the 56k modem boots up. You sign your first transaction on Ethereum, or like you mint your first piece of work on Ethereum. It's just like
it's like a frame changer.
Profound as that. It's like totally like wow.
I agree, 100%. Yeah,
this is some like sovereign object that I made that like I can go around the world and keep like a bit of information in my head and access this from anywhere. Right? It's not even like putting a website up or buying a domain on a registrar. It's like a fundamentally different thing. And I think that's similar to how the like financial application of this stuff, like some of the metaphors just don't exist. So people like go on TV and it's why most people are like, what are you talking about? This is a technology company, right? A lot of people think Ethereum is a startup, or it's like, 10 people in a room deciding what the monetary policy is. That was Saylor's criticism, right?
Yeah.
And that's just not how it works. And in the same way, you could say Bitcoin works that way too, right? There's like proposals to improve Bitcoin. The network can make decisions. Stakeholders of the network can add and remove functionality from Bitcoin in the same way. But the complexity of Ethereum, like he is correct about that, it's way more, like ridiculously more complicated, right? And the ability for people to write programs and run protocols and even like run massive scams is way higher. which I think is also a hard thing to outrun. Like the Lunas of the world, like all of these things, not all of them, but a good amount of them that have completely exploded. You know, 3 Arrows Capital is buying NFTs for like 2000x multiple 24 hours after they go on sale. And that all like, there's so much more economic activity on there that goes outside the bound of like, let's bet the price is going to be different today than it is tomorrow. There's like a lot of experimentation, a lot of like outright fraud. Like there's just like, you know, Wild West is a much more extreme version on Ethereum because of its like malleability or its like ability to be configured and like make anything you want essentially. But that's also led to like a lot of maturity in these weird little sections of the network over the last 3 or 4 years. Like when we first started talking about this stuff, it was like OpenSea, NFTs, like these like really underground like DeFi, like yield farming things where you were like deposit in this pool and like I never really got involved in that. I know like you were messing about with that.
Yeah, going for walks, earning
NFT
yield.
side.
Do you remember that one as well?
Exactly.
That was crazy.
Vape to earn, shit like that.
Yeah, that would work wonders for sure.
I think there was one, man.
Oh, was there literally? That's insane. Oh my god,
just hilarious.
Very
stuff,
creative Ponzi schemes.
And, yeah, exactly. And like trying to like bend the laws of economics in ways that it will never be bent. You know?
Like 72 trillion tokens being issued. And
exactly.
Like that as well.
Exactly. And like what it's really meant to be is like this like layer that you don't have to trust. You could transact between addresses. The same like premise as Bitcoin, right? It's like I could be my own bank. This is like you can be your own issuer of a currency if you want, right? You can make a token that represents or is a piece of art, for example, and then have price discovery around that thing. I want to sell 100 of these things. I want to run an auction or like do an open edition at a fixed price. And then these things can like move around the network, have price discovery, and people can hold on to them or do whatever they want with them. And even around that premise, like more sophisticated stuff has popped up over the last few years. So like Treasury strategy even has like leaked into some of this NFT stuff.
Yeah, let's explain what that is, because I know we've talked about it obviously with Sailor, but we're seeing that now. Like just obviously you mentioned, is it Tom Lee or
Tom Lee Fundstrat? Yeah,
Fundstrat is doing it with ETH. So essentially, people buy they're basically just companies that are buying up the asset, right?
Yeah.
And now we're seeing that even you saw an example of someone doing this with, was it CryptoPunks or something as well?
CryptoPunks, yeah. So like somebody I think bought 50 of them the other day, like in a couple of transactions, $8.5 million, which compared to what you're seeing happening in these like fungible treasury companies is nothing, right? Like these companies are raising hundreds of millions of dollars, buying Bitcoin or Ethereum and holding on to it. And I mean, I've held this belief for a few years now where like these things are insanely stable in value relative to like how novel they are. Like I remember having this conversation at Freeze. It was like the traditional art fair. Deutsche Bank is the sponsor of it most of the time. And the people that show up to that on their side are like fine art, they're like wealth managers for people who have art collections. So be like, how do I collateralize?
Traditional art, yeah.
Exactly. Someone's got like something in a free port and like it's floating around, but they can like borrow against it or, you know, build a collection that's held in the Deutsche Bank vault and like use that as collateral for all these different things they want to do. And talking to them, I was like, oh, do you know what a CryptoPunk is? They're like, what? No. Yeah. And you pull up this little website and it's like, oh, that's like that little face is $100,000, like it's $100,000 artwork. And this collection is $1 billion artwork as a function of that, that's right? Like wild, the cheapest one is $100,000. There's 10,000 of them. And not only is it priced, not only is it that valuable, you can accept a bid in 5 seconds. If you had a like $10 million art collection you wanted to liquidate that's like in frames in a free port off the beach somewhere, you got to get it. You got to get it like ship validated, like get the provenance looked at, get somebody to age the paint, go and like find a buyer for all the different pieces, go take it to auction, pay Christie's fucking 30% on every time they sell something. Like, it's a completely, it's the same exact market, but it's way more efficient and maybe more volatile. I would imagine that like it's comparable at this point, right? Like if the art market is dog shit, the crypto art market is dog shit, like, and inversely correlated too. Maybe with the exception of like, you know, like the Mona Lisa or like Salvatore Mundi, like these pieces that are like holy grail, like move every like couple times in a generation. But compared to like the vast majority of top tier art, this stuff is already in that category or close, just in terms of like bid ask spread, the amount of volume that it does. And
Jack, the way you described it there, it sounds like the difference between opening up Robinhood and selling a stock versus like even just like selling a house or like exactly a building or something exactly like where you have to go list it, you have to go market it, broker it, and you'll probably find a buyer, but it will probably take a good few months or a good few weeks at least or whatever.
Exactly.
That's a good way to compare it.
And I think people, I mean, maybe this is that weird argument, you know, like years ago, people were like, oh, real world assets on blockchains. And like, I think that sort of misses the point because like you can buy like REITs or whatever else, right? There's all these proxies for like real world assets that exist in the world. And it's like, it's not going to make that market that much more efficient in my mind because it's like, it's still like a proxy.
Oh, you're right. You still need to go and sell that house in person to that doesn't sell. I guess maybe like you said, the micro buying of something that could be the equivalent of buying a REIT. So people don't. I'm sure most people know what that is, but real estate investment trust it stands for. I think you can instead of buying a property, you can buy a share of a company that is buying up real estate, just like you'd buy a stock. So that is probably pretty close, but I'm wondering if I'm just trying to think out loud here, if there's any example where it would still make sense, because there is obviously a narrative of digitization of
people have done like
on chain.
People have like warehouse stuff, right? Like Pokemon cards and shit like that. Wine, where you can like trade the certificate essentially, or watches, like stuff that's like not subject to the elements. There's still like some contingency, and like there's a warehouse, somebody has to maintain it, like pay rent, make sure the air conditioning's at the right temperature so it doesn't rot. And like Saylor's argument on the real estate side is like a lot of that value will get absorbed by a fixed, like a scarce commodity that represents like, what does he call it? Capital. Like tries to make the distinction between like money and capital, digital capital, and these like objects have insane amounts of like economic history and proof at this point. So people are building these platforms. There's a point I was trying to make in the beginning where, you know, in 2021, this was really like, in a lot of cases, game of hot potato, right? It's like, this thing might be interesting in a few years, might not. And now there's that much trading history on a lot of these, like the top end of these collections, that people have built like proper loan infrastructure around CryptoPunks. Like if you have one.
Yeah. I was just going to ask you about that, because similarly, I want to talk about specifically people taking out loans on assets like CryptoPunks. Or someone just did it with one of your checks, right? You said single check.
Today,
someone took out on a platform called Gondi. I want to hear that. But similarly, in traditional world, a lot of people will know a lot of rich people don't sell their assets, right? Like you basically have a portfolio worth, say $10 million, $100 million, and you go to the bank and you say, I've got this collateral, it's stocks, it's a house, it's got whatever, and I want to take out a loan. Honestly, similarly to a house, right? Like when you get a mortgage, you're putting up your house as collateral, and you get 8 to 20%. You put up 20% deposit and the bank gives you 8% in cash. And if you can't pay that for a period of time, they take the house, they take the collateral. But a lot of people do this with their stocks. And it's a way that you can essentially not sell your assets and then pay capital gains or whatever the tax implication is. And you take that. But traditionally, we haven't been able to do that with these alternative, in air quotes, alternative assets. I'm just looking at this right now. JP Morgan is now offering their clients loans against Bitcoin ETF holdings. Wall Street, so this was in Bloomberg. And this is a pretty big deal. When was this? This was like a month ago actually reported. So maybe it's already available. But that's quite a big deal. Because if you go back to
Coinbase, I think, has $1 billion of loans issued against Bitcoin at the moment to like retail.
Well. Yeah, because previously you could do this on, like, let's say 3 years ago when we first started covering a lot of this stuff, you could do this on a DeFi platform. You could put some collateral up and then take a loan on it. There were obviously services that did that as well. Some of them aren't around anymore, but but this is quite a big deal for, like, I think especially because it's the ETF, right? That's obviously what's driven a lot of the buy pressure this time round has been ETF buys. So specifically with BlackRock's iShares Bitcoin Trust, I think that's IBIT, right? So that one, people can put that up and take a loan on that. That's a pretty big deal, I think. But talk to me about the one, in your case, someone did it on one of your pieces of artwork, which is pretty cool.
Incredible.
It's on Gondi, you said? Gondi?
Yeah, this platform's called Gondi.xyz. And no personal affiliation other than the couple of collections are listed on there. But they've essentially built over the last couple of months, they built like an OpenSea competitor. So they have an actual marketplace on there. And all of these collections have like a bid and an ask, right? And there's different spreads here. I'll look at CryptoPunks quickly. I'll do a little screen share.
Yeah, do a screen share, yeah. This feels a bit like when you shared Bored Ape for the first time. Here we go.
Yeah. Well, it's funny because it's like that much more. It's like the next cycle of sophistication, right? Some of this stuff is like bedded in. So here you go. The floor of this collection is 47 ETH, $176,000. So that's like the ask, the lowest price ask, and there's a bid for 147. So what's that? There's like a 20% slippage there or something, 15%. So there's a bid for 147,000. So 30 grand difference between these two things. So
someone's willing to sell it for 170K, someone's willing to buy it for 140K or whatever. Correct. 147.
Exactly right. And then there's 245 loans that are issued right now.
Wow, and you can just see all of this. This is kind of crazy.
Yeah, it's all totally transparent. So
it's all on smart contract. This is all ETH on ETH.
Yeah, all on ETH, all like permissionless, and like nobody has to wake up and press buttons for this to happen, right? You can put your offer up for a loan, you can put your asset into a loan and get your like capital instantly. And then they're all under different conditions, right? So these one at 12.5% APR, 33 ETH in principal, 33 ETH in debt. And then if they default on the loan, then the person that's loaning the money gets the punk. There's obviously getting the payments from them too. Renegotiate, I don't even know how this works, but obviously
probably you're making like a proposal almost. Probably you press it and they get asked or something like that. It's because this is between two different people. It's a two-way marketplace essentially.
Yeah.
It's very cool.
It's crazy. It's crazy, yeah. And
again, comparing that, Jack, real quick to what I just shared with JP Morgan, the difference is with JP Morgan, you're going to JP Morgan and you're saying, hey, here's 100 grand worth of Bitcoin ETF or whatever, and give me a loan on that. And normally, I don't know the percentage, but what's the collateral ratio? What's the ratio normally like? You could probably take 20 to 50%. I don't know.
I don't actually know, but these are.
In this case,
like
it's 80%,
strong.
right?
Yeah, it's very crazy.
That's crazy. Yeah. So if you've got 100 grand, you can take a loan of 80 grand in this case, the one that you mentioned earlier.
Yeah, and that's like scarce objects, right?
We got a little toad action in here. I wonder if anyone's doing it on
there should be toads on here. I would hope so.
Blue chip NFT, that one is, man. Still holding it.
No doubt.
Crypto by Gremplin. There we go. This is happening live for the OGNA listeners.
Yeah, look at this, man.
There we go. Look at that.
This is now a sophisticated financial asset. I don't know how many episodes it took, but not that many.
Oh, my God. Look at that.
Yeah, so there's one in loan here, but there's like...
Go click that loan. I'm
Something's
curious.
Off here.
What's going on
the
loan
here? The price is under the bid. So
Okay.
This guy
all right.
should be. That guy should be.
I'm gonna have to
sold.
check this out
Blur.
myself, but
Yeah. But that's a good one.
there you go.
So these are what? These are what? 2Gs.
This
a
is
piece
bringing
now,
back
something?
memories. I remember many texts back and forth, laughing at the toads. This is one of the best things I remember. This is the whole, all the money I lost in this era of shithousery is worth it just for the good times, man.
Oh my!
That was good times.
I
yeah.
mean, not investment
good.
advice, but the toads will outlast a good number of instruments in this space. I will say that the vast majority.
You can't help but
vast
laugh when you
majority.
see them, right? At least and
Lindy.
the name is very good. So
It's Lindy, man.
now, all jokes aside, Gremplin is an OG, right? He's
there you
he's
go.
a proper guy.
Incredible.
Beautiful.
Yeah. So more stuff like this. I think there's like some apes here. Bring it right back. 10% APY on the APR on this. Yeah, and like I would assume people that are like exposed to this are like moving capital around a lot faster a lot of the time, right? It's like, oh, they see an opportunity. Let me get collateral for this thing that I'm planning on holding on to, deploy it somewhere else. Like even that process, right, of like these networked objects are far easier to borrow against because of their like
Yeah, they're
ability
frictionless,
to
right?
yeah and just source like interest and price discovery globally. I'm sure, I mean, I don't know how sophisticated some of these stock platforms are, but obviously Robinhood's going to get to probably a very sophisticated version of this too, I would think.
I mean, they're
YOLOs.
insane. I will say, yeah, Robinhood, also not investment advice, but they have been on an absolute tear.
Oh
man.
my, incredible.
Obviously, the stock has been on tear, but just the velocity of
deploying the stuff they do.
yeah, well, it's
doing
insane. I was actually with a
crazy.
friend this weekend who used to work there, and he'd worked on, like, I'd moved one of my old Roth accounts, like, because they were doing this, match thing.
Mm-hmm.
Most of mine are still like in like Vanguard or whatever, but this was, I was like, okay, let me just try it out to see, because you can't even buy like the Bitcoin ETF, for example, in Vanguard still. They don't let you do it because they've got a policy. Yeah, the closest is, and this is where I had to catch myself, again, might be talking too much here, but when you're like, the closest proxy is you can buy a MicroStrategy, but you can't
Wow,
buy
nice. That's
because you can
funny,
buy an
though.
individual stock, right? So that's that. I remember we talked about it. It's like, why would anyone buy MicroStrategy when you could just buy Bitcoin? Why would you buy
Well-
that when you could buy a Bitcoin ETF? Because sometimes there's actually blocks. Like in this case, I'd have to move all my retirement account somewhere else if I want to buy that in my retirement account. And so, So anyway, Robinhood though, really, I mean, they've got the credit card, really good, 3%. I know you're not a big fan of credit card stuff, but except for when Coinbase launches their 4% credit card, that is actually insane. By the way, have you seen this? Yeah.
3% back, 3% Bitcoin back, isn't it? Or something?
Yeah. You'll get 4. I think it's up to 4%. It will start at 2, and it will go up.
On
depending
what
on how
amount?
much. I don't know if there's a limit. It's more like you have to have a certain amount in your Coinbase account. It hasn't launched yet. It'll be in the fall. That is an
Incredible.
absolute sick deal, to be honest, because just think of it like for an average person, you're buying 4% of Bitcoin with every transaction. It's the perfect way to just stack sats, as they
Yeah,
say. And
man.
also, also
Well,
I'm
maybe
thinking
my mind will be
macro view.
changed on credit
Yeah,
cards.
but just think about that. Like imagine you were doing this 5 years ago
Oh my God.
with normal
Sickening.
purchases when
Yeah.
the price was 5 times less or whatever it was.
Sickening.
You would have paid off. You might have just got a free Tesla or whatever else you bought on the credit card, But no, all jokes are, I'm curious to dig into that a bit more about how much buy pressure that will actually create if enough people were using it. Just thinking of like Coinbase, that's a buy order.
There's a lot of
essentially,
it. There's a lot of users, yeah.
Definitely. So, and a lot of people, that'll be interesting to see.
And maybe
Gemini's
this is a
already got
Trung.
one as well, but yeah,
Maybe
go
we
ahead.
wait for Trung to get back on this, but like, what?
Yeah.
Where's the 4% coming from? Who's paying
Well,
for that?
I
The
guess
credit card fees.
No, I actually have looked into this because there's a reason. In Europe, we don't get any of these credit card offers, right?
Yeah.
And so most of this, outside of the Bitcoin one, let's just take a step back. Most of this comes from travel-related rewards. If you think of like airline, air miles.
Yeah.
And the reason is, and again, this would be a great Trung segment, airlines essentially make all their money from the frequent flyer
Reward
programs.
program, yeah.
Yeah. And so there, I actually listened to a really great pod on this, and he was talking about literally if you took out the value of the company, more of the value, like the actual flying is a negative value.
Right.
Let's just say 110%.
It's like car dealerships issuing loans. It's the same idea, right?
Exactly, yeah. And because what they do is those airlines, forgot which way around it is. One of them is selling the miles to someone else or something like that. So there's a weird thing. It's you can dig into that.
MicroStrategy pyramid.
Yeah, seriously. When you hear it, you're like, what? This doesn't make any sense. And then obviously in Europe, you don't get any of these deals, right? Like when you just about get a credit card. Like most people, a lot of people using debit cards. It's not a big deal. Whereas here, you get these 50,000 mile, offers from Chase.
10 million percent APY.
Exactly. And obviously they do make money from people not paying their credit card bills also. That's the credit card companies themselves. But the airlines themselves are selling that data essentially. And that's how they make a lot of their money. So it's pretty.
We should do a full episode on
that. Would be cool, yeah. I would need to read a bit more about it, but it is because I remember hearing this and thinking it sounds super weird. I was like, this must be wrong. And I went to ChatGPT, asked, and it broke it down for me quite well. So very crazy.
By the way,
stuff.
the new strategy instrument is called Stretch.
wait. Let me pull this up. Wait, micro strategy. What? So just, do you know anything about it? What the hell does that even mean? It's just
I honestly have no idea.
Here we go. Your financial engineering.
Strike.
A new perpetual preferred stock via IPO to select investors. This is Sailor directly. So yeah, definitely.
This still must be arbing all these like Vanguard things, right? It's like, it has to be like some pool of capital can't get to exposure to Bitcoin any other way. So we're going to do this. Like,
sorry, by the way, I found the slide with the pyramid. Let me share my screen because this is actually Sailor presenting the slide. We got to get this just for the history books. Exactly. Look at this, man. This, wait, please. Look at Sailor in the little right over here. Yeah. Long-term target Bitcoin capital structure, 3 years. You got MicroStrategy on the bottom, B2C. Man, that is incredible, man. BTC rating 10K. Honestly, I don't actually know what it means, but maybe someone can explain. But the fact that it's an actual pyramid is incredible, man. That's so funny. So, Jack, that brings us perfectly to the last part of this section. How does it all go tits up here? Because it does feel like inevitable that someone, it might not be MicroStrategy. I'm hoping it's not them. I think they've been pretty professional about it. But every cycle we've got to a point where FTX is doing some crazy stuff last time round. Obviously, we had Anchor Protocol blew up. And normally the pattern is people get too excited and euphoric. They start using crazy leverage. They start taking more and more risk and something breaks and the whole thing comes down. Now, that doesn't mean the whole system's coming down, though. Now we're getting to the point where countries, big companies, institutions are now exposed to this. So, it wouldn't be a crazy scenario that there could be a shockwave based on this. But what's your take on all this, man? Because it's starting to look a little, I don't want to use the word frothy because I still think we've got a little while to go in this bullish environment. But how are you feeling about it all?
Man, I always read this theory of like no more cycles. You've seen that? Like just based on the level
I don't fully agree with it, but I want to hear your take
the level of like embeddedness in the traditional financial system, which I somewhat can understand in the same way that like you don't experience like 80% drawdowns in like the S&P. That would be like the world would be on fire, right? People would just be like driving off bridges.
Yeah.
And like
I think we could see a 50% drop though at one point.
Yeah.
40,
I mean like I have no idea what I'm basing this off of, but like, well, no, I'm basing it off of that. Like the idea that this begins to be more correlated with like the traditional financial system, which is pretty accurate, right? It's like, it's being like hoovered into all of these vehicles that are strongly correlated with the rest of the market, and
volatility should slow down as it gets bigger, as it becomes a bigger asset.
Which means opportunity slows down too, right? Which
exactly,
is like the cycle is a double-edged sword because obviously
what's driving it is the appetite for risk and appetite for returns.
But it does feel like even to use like Saylor's own language or ideas, where it's like people trying to get something for nothing. Like that's when you start to just think, oh, something's got to break, just as a function of like the world will not continually reward people for just borrowing money and buying this thing, right? There's only so many marginal buyers at that strategy. The question is like, are we... And everybody that joins, I guess, gets like what's the specifics of Saylor's like debt is like Bitcoin has to go to like $15,000 or something for him to get even called on some of it. Like he's like not bankruptable via this essentially, unless it's like categorically over. But there's like, I mean, it's almost certain that someone will participate with much less of a what's the word?
Margin of safety.
Much less margin of safety. Yeah, exactly. Like, and as time goes on, it's like, I guess you have to start being able to analyze what the margin of safety is for people that are doing it on leverage. Like the margin call at a certain scale is going to be what essentially just creates panic and fear up to a certain point, right? But the no more cycles narrative comes from like, okay, now you have like JP Morgan backstopping this stuff. And like these massive financial institutions, like the American government, like there's
normally the cycle is based on the halving cycle, right? And there's normally a bull and bear market. Is that what we're referring to?
Yeah, I guess so. And it feels like maybe the business cycle to some degree, like liquidity and M2 and all this stuff. And that actually like, what was I think we talked about this back in the election time, like Bitcoin halving cycle is aligned with the American election cycle, whether that was intentional or not.
That's true. It's like what's correlation versus causation there.
And there's always some like, almost always some like monetary stimulus event on those anniversaries, because you're trying to get people to vote for you again, right? Like people are
and
like
to be fair, there
liberal.
was 2020 a complete outlier event with the pandemic, record levels of printing because of that as well. So there isn't that much history. I mean, depends how far back you go, but in terms of actually like number of cycles to analyze, I guess in that way too.
Yeah, it does. It feels like it. Yeah, obviously will be some like absolute clanger moments for sure, but it doesn't. And this is maybe like famous last words, right? It's like it doesn't feel like the downside is there, and really as like a function of its distribution. Like FTX destroyed those markets because the vast majority of people that owned them were like these tiny little, like even the most sophisticated players were like little funds, right? Like little edge case funds and individuals, and like maybe I'm exaggerating that, but like the number of institutional holders of those assets 4 years ago was completely different. No?
Yeah, no, it's a good point. And I would say just even from looking at the data and also just anecdotally comparing it to the last, I guess if you count it as cycles or bull markets, at least this was probably for both of us like the third proper, up and down kind of like 2017, 2021, whatever, and now 2025. It feels very different to me in terms of just the energy from friends and family, like retail equivalent versus like to me, like most of it's been driven by institutional money. Even like I have friends who are doing stuff with like governments in Africa related to this. Like they're mining. Well, it was reported actually, the Ethiopia one recently, that that's pretty. That wasn't happening 4 years ago, right? So this is the sort of stuff that we just hit an all-time high, and I don't have any random friend being like, hey, about this stuff, what's happening? Should I be buying this thing? Should I be selling this thing? Versus 2017, 2021, everyone was talking about, you go home for Thanksgiving and Christmas. Now, maybe the test is Thanksgiving and Christmas normally, right? Like you come in a few months' time, it actually lines up with both the M2 data and 4-year cycle kind of narratives. It may be that we get to that point, and maybe that will be a flag for us to be like, okay, this seems to be rhyming like the past.
Yeah, I kind of like that theory of like, you know, don't even need a 2-hour conversation about it. It's like, it's just liquid, like global money supply. It's just always going to be a proxy for that. If that contracts massively, then so does all this, you know? It feels like, feels obvious in that sense, but it is a different animal now. And the upside being, oh, you know what one I was thinking of when you were talking too is like that tariff crash a couple months ago, 2-3 months ago, whenever it was, or more. Like
everything went on sale. Yeah, I remember.
Yeah, but do you remember seeing like the retail response to that?
Oh yeah.
Like the culture has changed so much since like COVID, where like people see the stock market implode during COVID. It's like, sell everything. We're going to fucking buy
versus
rice
this time you're saying,
and beans. Yeah. And now it's just like, oh, these guys are just going to print forever. So like, just give me a better entry. And it feels like that's almost become way more part of like point. The consciousness and the like financial nihilism or whatever you want to call it is just like, I know these guys are going to like print their way out of this eventually. So I'm just going to buy it.
And because that means the story has become so prominent in the same way, like our parents were told house prices always go up. And we were kind of told that as well. Now, even just regular retail, and I'd count myself as regular retail, but at least we follow it a little bit more than just an average person. They see it go down. They're like, oh, this is going up. So it's a good time to buy when they've got their paycheck coming in. That's a really good point. I wonder if there's any data around that being a bit different this time. Obviously, the price went back up. But
yeah, I think that last, like anecdotally, there's people that I know that are not like in finance whatsoever, and they're like, oh, that like I scooped up a little bit more in the portfolio.
That's
like,
a good
for you, man. Yeah, and like if there's an event in recent memory which was COVID for people, right? It was like all these assets bottomed out, and then all these people that have experience or are sophisticated financial actors just plowed everything they had into this, and now they're doing great, and I'm like smoked because I panicked.
Yeah.
It's just like the crowd calling the bluff on the institution in a lot of ways. And there's
you're right. It's just we learned our lesson basically from the last few times. And it, like even for me,
and it's so connected now.
Yeah.
The world is so connected in a way that it wasn't maybe even 2008, right? Everyone's got Robinhood, like GME, Fever, like this stuff is like, people are way more
that's a good point.
Alert and aware of it. And that feels like a cushion as well.
Yeah, no, we could probably say wrap it up there, Jack. I know we got to run in a second, but very, very good chat. Great to do some Enter the Internet stuff. Let's save some of that for next week as well. I hope you guys enjoyed that. Thanks, Jack, as always. Enjoyed that as always, mate. And we'll see you guys next week.
Nice one, mate.
Cheers.
Yeah, it was great.
Bye-bye.
Peace.